Welcome to Trading Lounge and the Australian report for the 14th of September. So I know that we're short in this market, but I feel that we need to get out, and the reason for that is that the each leg that's been moving down through here is becoming shorter and shorter and shorter. So it's reluctant to go down. This is a minor level at 5.8 here, so it's offering support. And there seems to be sort of good support coming in from the US markets in stocks and so on. And also this has been governed by sort of iron ore, so we'll look at that today as well. So the market can still go down from here, but I think that it's a good idea to just protect ourselves. Now, the other point what we can do here is that if the 5.8 becomes the retested resistance here, we'd need to see it on the other side here. Then we can resume our short trades at that point, right? We need that first low below the level here. But otherwise, I think we should get out. And also too, if we find support on 5.9 here, and we get a classic trading levels pattern, so from that high to this low here, that's the 60% retracement level. So we'll wait for the first high above the level, that reference point high there, and we'll look for the classic trading levels pattern across that 5.9 here. So we want that first high to come in first, and then we can look at the second high and even a third high here to move in on the long side, because that would be above the 61.8%. And then we can also look to add if the 6,000 if becomes the support at that point. So yeah, this market is over the last few days is reluctantly wanting to move down. There is good support, so I think that we need to lock in what we've got here at this point. Now, we know that these markets are, well, they're influenced by a lot of things, but in a nutshell, the iron ore and the finance or metals. So let's just have a look at iron ore for a moment, just on the daily chart here. This it still may move down somewhat here into the 800, but the 800 is the good support, and we're looking at this trend to the upside's not finished as 1 and 2 here and 1 and 2 here and 3, 4, 5 for the third wave. Yes, the fourth wave can pull back lower, but it's got good support and it can push up from this point here. So we just need to be a little bit mindful of that. Let me just check on BHP in the US. Yeah, it was up 3% nearly, well 2.9%. So it's getting its bounce there. So that hasn't come into Australia just yet. But when we look at BHP here for a moment, now, I also wanted to talk about this as well here, because we've got 1 and 2 and 3 and 4 and 5 here, so that's fine. But I've been curious about this little move in through here. I think that we may need to adjust this count here, and if I can just go and do that now, because this wave 1 here is an A and a B and a C into this wave 2 here, that's sufficient, which leaves us this other little leg here. So we'll need to put this in this space here. So just bear with me a second. Then this would line up with what I've got on the iron ore page at this point. And this would be a wave 4 coming back here. Let me just move these out of the way. The wave 4 may not be finished, but one of the important things here, if we take it from this low here, you can adjust that to this one here, we're right on the 38.2%. So there's a chance that we could start bumping up from this point here into another section here. This would line up with a lot of US stocks as well. So just pointing that out there. FMG has been the sort of nice pure iron ore from Australia. I mean, Rio is obviously on the iron ore side of things, but yeah, there's a lot of things going on with management and countries, and because it's basically in the UK. But I just wanted to just go back out to the weekly here. I just wanted to look at this particular chart here because yeah, there's a lot that could be said about this. We would have to look at this as some sort of wave one back to the upside here for that. Let me just check on this here while I'm here. No, that's still the low there in the GFC here. So we could count this as corrective. We could go like wave one here and A into B into C wave over here, or we could go wave one here and back for wave two, then wave one here with an A and a B and a C wave here. So we could have wave one here and wave two here, wave one here and wave two here. But even if we dismiss this and let it go as part of the correction, then we'd still have this as wave one and wave two here as well. So then when we start to open this up here a little bit, this also would need to be called wave one and wave two here, and this would also need to be called wave one and two here because it overlaps this here. So in a way, we've got wave one and two here. So all of this here is part of that third wave of that structure. Then we'd have the fourth wave here, and then the fifth wave here, just for this one here. But we still got this one and possibly this one and possibly this one here. So we can see that iron ore here, in terms of FMG, this stock is somewhere up at the $40 mark at least. So I think that's kind of interesting in its own way, but we'll just come back and stay with what we actually know at this point. So we've just been tracking it from the last, from the March lows here. And tracking it from the March lows here, I've looked at this as wave one and two here, then 1, 2, 3, 4, 5 for 1 and 2, and 1, 2, 3, 4, 5 for 1 and 2 here. Yeah, it's possible to count this as 1 and 2 here. That means that if that's the case, then this here would be wave 3 here. And the problem with that, it's okay, but it makes this wave 3 here compared to wave 1 here much shorter. So that's okay too. But that means that this wave 3 here coming into this section, which would be 3, 4, and 5 here to make wave 1 here in that case. And that's possible. We need to look at it. We just can't throw it out just yet. So we'd need a shorter wave 5 to make this wave 1 here. But even so, what I wanted to say here is that this correction here, this is a bit gappy here, but we'll just assume for a moment that that's in 5 waves. It doesn't really matter, it could be in 3 waves. But what matters is that this move here, you can clearly see that it's in 3 waves here. So we could look down here as 1 and 2 in here, and 3 here, and 4 here, and 5. So in this particular case here for FMG here, we can look at this as an A and a B and a C with a little bit further to go here for this. So we should see another little move down for this market. But what I'd also like to say too is that if this top gets taken out here, then you can also look to go long at that point. And I suppose we could, obviously we got $20 sitting there, which is a major level, and we normally trade to that. But because it's a 5th wave, we'll probably go above it. So you could trade to $21 quite comfortably, if not 22 in that space. But yeah, look, just to point out that this has further to move to the upside. So if this is a little wave 4 here, then coming back to BHP, then this would make this a little wave 4 in this 38.2% retracement level area here. So coming back to the ASX here, if I come back to the daily chart here, we've been talking about this in 2 ways. We've been talking about it as a wave 1 here and coming back for a wave 2 here, but also we've been lately talking about it as a wave 4 here. And as a wave 4 here, if we take this wave 2 low here to, and I know this looks a bit dodgy here, but that's the actual high over that one and that one on the cash market. So that's the one that we need to work with. And this is also at the 38.2% here, sitting at the 5.8. So it's not to say that it's going to hold or anything like that, but I'm just pointing out that we could have a turning point here. It would be, of course, nice to be having support on the 6,000 and we can go long from that point, but we're also talking, refining that a bit now and looking to go long on the 5.9 here. So we're going to cover our shorts, and if the 5.8 becomes the retested resistance, then we can look at, you know, coming down further, and we can resume our counts of 1 and 2 and 1 and 2 and so on. But we're just not getting that movement in here for that structure that we've got at the moment. So we need to pay attention to that subtlety, and we need to act on that, and that's what we're doing today. Also too, I just want to have a look at CBA. Now, there's a couple of things I want to have a look at here. Now with CBA, it was possible to count it up as 1 and 2 here, and 3 here, and 4 here, and 5 here, and coming back into this box here, which is fine. I can also count this up here too, by the way, of having wave 3 there. So if you've got that, then that's okay too. What I need to do is, I just want to have a look at this a little bit closer in this space here for this. Because one of the things we're looking at here is like, do we get 3 waves down here, or do we get 5 waves down here? So maybe I'll need to go to the tick chart to see. Oh, okay. So I've got this in green. It could be in blue, so don't worry about that too much. But I just want to take you for a journey from the top here. We've got 1 and 2 here, and 3 and 4, and then 1 and 2 and 3, and 3 and 4 and 5 to here. And it's a little bit small, but an A and a B and a C here for this wave B here, but more importantly 1 here, 2 here, 1, 2, 3, 4, 5 for the third wave, fourth wave, and the fifth wave coming down here. So we know we're close to the 50-60% retracement level. This is a medium level here, 65. It carries a bit of weight. So all I'm doing is pointing out that we've got 3 waves here so far, and we'll need to try and understand if we're going to get 5 waves. So we've either got wave C or we've got wave 3 here. So wave 3 will produce a wave 4 here. So it will be all eyes on this wave 4 when it comes. We need this to land first at the 65, and then we need to monitor this closely here, because if we get 5 waves up to this point, then we know that we're in a bullish mode. I also have to point out too, and I do this now and again, is normally when we've got wave 1 coming down here, which is really on, well, say about, pretty slack angle really is. Well, anyway, if we're going to get a wave 3, we normally look at wave 3 moving a little bit quicker to the downside here. I suppose that the only thing that makes me think that it's a wave 3 here is its structure, its form. You see how much bigger it is in terms and got more definition than the first move here. So that kind of telling me that it's a wave 3 rather than a wave C. But that said, as a wave C here, it's really got much more of an angle coming into here. It's even more lazy when it should be picking up more speed, and it has got parts where it's got a bit of speed, but at the same time it's you know, well, I suppose this makes it look like it's going sideways here a bit, which it is in that case, but yeah, we'll see. Anyway, I just wanted to point that out here, because we'll keep an eye on it, because if we do get an impulse wave up through here, then we'll look to buy the pullback, and we'll look at this as as corrective in this space, because I do have a hard time. If I just bring this charting program up, if I just have a look at ANZ, for example, I mean, it's moving down, but I still have difficulty in looking at this as an impulse wave here. I can see that it could be an wave 1 here, an A wave here, a B wave here, and a C wave here for wave 2. It's pretty elaborate though, and yet it has been moving down lower, so I dig that. And, it may be an A wave, a B wave, and a C wave coming back to this point and then moving off from that point. And then we would need to look at these as impulse waves to the upside here. I don't know, but I can say this much though, is that where it currently is now, if we get a support back on the 18 here, which is the minor level through here, then we need to also consider looking at the long side here as well. It'll be nice to take these highs out or get a trend line break through here and all those sorts of basic technical analysis sorts of things. But yeah, this has been, all of this here has really been finding the 18 here as the resistance here. So if that changes, then, and that becomes a nice solid support, then we'll need to look at going long. I'll just have a look at WBC. I haven't seen that for ages. Yeah, same here again as well. It's just difficult to get this as an impulse wave. That's all I'm saying here. I mean, this looks more like an impulse wave here, doesn't it? Like wave 1 with an A wave, a B wave, and then some sort of 1 and 2 and 3, ABC for 4 here and down for 5 and finishing here and then moving up. So, I mean, it can also be bearish as well. I get that. But all I'm pointing out here, say in this case here above the 1750, then we need to look at the long side for that as well. So, yeah, I mean, in the US stocks, in the indices, we're looking for another wave to the upside. So I'm thinking that may take the Australian market to the upside. Alrighty, I'll just leave it at that for the time being. Do I need to recap here? No, we've talked about all of that. So yeah, look, we're still in a rock and a hard place with this market, but we just need to edge our way forward in this. Okay, cheers.